guys, it's Carter, and in today's video, we are diving in and looking at the one and only Google stock, ticker symbol GOOGL. We're going to be analyzing, should you buy this company at $87? So I hope you guys all enjoyed the video. If you guys get anything in value out of it, hit that like button, subscribe, and guys, we are almost at 21,000 subscribers, which is absolutely crazy. So thank you to each and every one of you. And if you guys are new to the team, make sure you guys like and subscribe. So that just dive right into it. So kind of we all know what Google is, right? Google is the leader of search engine, right? If anytime you have any questions and you want to look something up, the first place you go to is Google. And the second place you go to is YouTube. YouTube is the second most searched thing on the internet, which is absolutely crazy. And the company that actually pretty much holds Google is Alphabet, right? You'll hear me say that a couple times, and that's just the holding company for pretty much all of the Google companies, right? You have Google, you have YouTube, and a variety of other companies, because it's more than just Google here. But you'll notice that over the past year, kind of what we've seen from this stock is it was trading for about $74, and it slowly started stair-stepping its way up, hit $151 a share, and then just slowly and surely worked its way down to $87 a share. Now, the reason why we kind of seen this sell-off is for a variety of reasons. The first reason is just the general market right now has sold off about 25%. Anytime you have just the general stock market selling off, you're going to have leaders, right, of tech and, automobiles. Their stock's going to sell off as well because it's in there. And you'll notice that's kind of what we've seen. The second reason why we had sell off is because of some missed earnings. You'll notice that the company brought in about $69.69 billion, which is still so much money, but they actually missed their earnings by about $192 million, which is crazy, right? And the thing about this is, before Google was an absolute powerhouse, right? During all of the lockdowns, you'll notice all of these fantastic earnings report. Anytime you see green, that means they pretty much beat their earnings. So you'll notice that we slowly started to see some missed earnings, and that's kind of some other reasons why we had some sell-off. Now, not to mention, for the first time since 2013, YouTube ad revenue has gone down, which is not good for me. But overall, what we see right now in the kind of market, in the economy, is people aren't spending like they used to. It's a lot easier to spend money when you have a $1,400 stimulus check, and right now we're kind of paying the repercussions of all of that. So I definitely think this is more of a short-term thing that we're eventually going to get through, especially with Google. Not to mention, if we go ahead and we look at it, you'll notice that Alphabet, which is the holding company for Google, they have about $116 billion in cash, which is a lot of money. So if Google or Alphabet or all these companies ever go through a hard time, they have $116 billion to continue to pull from, which is quite a lot. Not to mention, they only have about $14 billion in debt. So they have $116 billion in cash in hand, and they have only $14 billion of long-term debt. So they have way more cash on hand. So if they ever go through a hard time, they could easily pay off that debt and still continue to invest and innovate inside the company. Now, the second thing you need to look at when analyzing a company is the price to earnings ratio. The price to earnings pretty much determines the price for their earnings. It's pretty much, that's it. But anytime Google or Alphabet, whatever you guys want to call it, is underneath a 20, this represents a solid opportunity to start the process of investing, right? The reason why is because this represents an undervalued point for the company, and historically this only has happened a handful of times, and looking back, we would have been foolish not to invest during them. Now, the last thing that I kind of want to cover and talk about is something called the RSI. The RSI is the Relative Strength Index. Now, what this is it analyzes the company and it determines if the stock's overvalued or undervalued. And you'll notice kind of the squiggly line here on the bottom. And you'll notice that right now it's trading for about a 33 on that RSI line. The last time it was trading for a 33 was right in here. And what we had was immediate buying pressure back from about 128 to 151. You'll notice that the last time was all the way back in here. During this time, this was during the March crash of 2020. And what we saw was immediate buying pressure, and that's kind of what we see. It's hitting that undervalued point, very similar to what we're seeing in here. So answering that question of should you buy Google, for me, Google represents an absolute for sale sign to start investing. The best strategy would be to dollar cost average it. So invest on a weekly or monthly basis into the company and just let it be. You don't have to actively watch or analyze. The company brings in a lot of money, and I think we all know it's not going anywhere anytime soon. So for me, I am buying as much as I possibly can because Google carries so much potential. And right now, we just see a lot of short-term volatility. Pretty much what we see from all if not most of the companies right now in the S&P 500. So guys, that is it. I hope you guys all enjoyed the video. If you guys did, hit that like button, subscribe, and we'll see you guys later. Take care.